Yes, we've got about 20 seconds here, guys, until manufacturing PMI and services PMI come out for the United States. Could be market moving, so we will have coverage for you there and see how things are going with that. Again, let's see if that does anything to the dollar here this morning. Usually, it's not a huge mover, but sometimes it can surprise you. It's just one of those things. So let's see, numbers coming out. The dollar is unchanged so far. Dollar taking a little bit of a hit, but really nothing too substantial. PMI numbers pending. We have not yet gotten them, so potentially still some movement could come out of this. And when the numbers drop, you will usually know if there's any sudden movement. Just don't blink. Sometimes it can, sometimes again, it'll come out and the numbers are not impressive. So there we go. We do have numbers. So services came out higher than expected at 55.1. Manufacturing shrank, showing 48.5, under that 50 mark. Of course, when it comes to PMI numbers, way to read this is above 50 indicates industry expansion, below indicates contraction. So we're seeing some contraction in the manufacturing area. We're seeing expansion in the services PMI. PMI, of course, this is the level of diffusion index based on surveyed purchasing managers in the services industry. So it's an idea of, hey, what are managers purchasing? How aggressively are they purchasing right now? In the services area, we see some expansion. In the manufacturing, we see decline. And manufacturing might be things as simple as I don't know, washing machines or something like that, like industrial purchases for a manufacturing thing, right? So if we see contraction there, but then we also see increases in the services, it's a bit of a give and take. It would be more market moving if both were red or both were green. So I'm not seeing too much volatility there.
This applies to both commodities like gold and oil. So I have been hesitant on gold because of smart money. I thought a test at that trend line would be promising, but also what's keeping me hesitant about taking a long trade is because of the weekly sentiment data is changing to the downside for most institutions. So in other words, they're letting go of long contracts while increasing the short positions. They're doing that for both gold and oil. For the past couple weeks, I think gold has been doing that. It might have been two. I'm not sure for oil. I haven't been tracking it as closely, but this week you can clearly see a change in longs and shorts to a more bearish sentiment. Although it's still majority long, it looks like maybe things are starting to flip. But then again, you don't know if it's short-term profit taking or just setting up price for better discounts on price. But it's hard to tell. So that's also something to keep in mind if you're looking to trade gold or oil, just what smart money's doing and what they might continue to do.
Did you know that you can watch Trader Nick live stream every morning, Monday through Friday, with guests from all around the world? Each morning, right here on the A1 Trading YouTube channel, we put on a live show where Trader Nick, along with some very special guests, go over their charts and ideas for every kind of asset. We do a live reaction to news drops and do analysis immediately following. You never know what's going to happen during one of our streams. So come be a part of the live stream community. You can find our live streaming schedule on the A1 Trading Twitter account each week so you never miss a news event.
Yeah, and Frank, also, I'll show you something. One thing that is a little bit concerning to me on oil, and granted, transparency, if I show you my screen, I am long oil. So this is something that we now have, to your point, for tracking something week to week. You mentioned you hadn't been keeping an eye on oil. I hadn't really either, but I'm looking at it now, and we've got that data with the recent updates that you and I worked on. The week to week data shows there has been a decline in long interest on oil over time. We're still, though, we're floating around 70%. And, perhaps this decline in recent weeks. This goes back from April of this year. Of course, this is when we started tracking, and the software has been building in this report. Oil has been declining in terms of COT long interest. However, I think much of this is probably due to a bit of recession concerns. And despite, I think there is that possibility for a mild recession, it seems like you and I, Frank, especially, were on that more Fed is going to pause here, and we may have a mild recession. But again, when we talk oil, from fundamental perspective, the big question is all about the recession. Oil is incredibly sensitive to whether the recession is going to be prolonged and painful, or mild and short, or not even, depending on who you ask, existing or not, right? So I think there has been some decline, but still a high net long positioning, it seems, from this COT non-commercial reporting. So I'm looking at this and I'm saying, okay, I think that yes, we've declined, but we still have a pretty high long interest overall. And Tom, to your point, I think we're starting to see a bit of a breakout to the upside here. I already have a long position on, like I mentioned earlier in the stream. And as long as we're able to continue to stay above this, with tomorrow's meeting minutes, that will be impactful, right? Because of course, what the Fed chooses to do with their monetary policy, whether they raise rates or not, is going to raise all sorts of red or green flags about recession probability, right? If they raise rates more, many people are going to be more concerned with the banking situation, with lending being, credit drying up. Those things can cause fear and recession, which could work against us on this long idea for oil. Whereas if we're more on what Frank and I have mentioned, potentially pausing from here, if we get confirmation on that side of it, oil could have a nice run alongside things like gold as well, with softer monetary policy. So there's a little bit of fundamentals breakdown, at least my take on it. Tom, what else? So we talked gold, we talked oil, we talked a little dollar. Are you looking at any pound pairs right now?
Not well, a pound Canadian dollar. So I'm just waiting for this Canadian dollar strength to take hold, basically. And like I say, that corresponds with an increase in oil as well. But New Zealand Canadian dollar is one such trade. Yeah, I've just been looking, I've been dying to tell anyone who's listening about shorting this pair. And the reasons are this, so weekly I'm seeing this downward channel on the weekly chart with New Zealand dollar, Canadian dollar. Okay, so there's no, if we to follow this channel down, we've still got plenty of room to move into. So that's the weekly, a nice downward channel. And on the day chart, structurally for me, we are still in a downtrend. As soon as this low breaks here, I have just been waiting for a retrace and price to break down. I've been waiting for this for days, weeks. Yeah, and now it's finally seems to be breaking down. We'll see where this daily candle finishes. But if that oil, buying pressure can continue and that continues to go up, then there's no reason why the Canadian dollar can't have some, follow through strength as well on the back of that. And I'm seeing trades on lots of CAD pairs, potentially, back down to here, even back down to these lows. And you'll see this across lots of CAD pairs, pound CAD, euro CAD. So yeah, that's what I'm seeing. I'm looking at all CAD pairs at the moment.
Sure. Yeah, CAD an interesting currency right now, and like you mentioned, that correlation to oil could be an interesting play if you are, paying attention to the oil market. You can't really look at the CAD, the Canadian dollar, without keeping the tabs on what's going on with oil, because of course, for those of you guys who are newer to this stuff, Canada is a major exporter of oil. So of course, if you're the Canadians and you're seeing the price of oil suddenly jump in price, that means the stuff that you've got to sell suddenly just went up in value. Your economy just got stronger, and vice versa. If the price of oil is tanking, for lack of a better word, the pun intended kind of thing, right? If you've got oil tanking, it's going to also be hurtful to the Canadian economy. So an interesting point there for sure. Let's go back for a second here. and just take a quick look at where retail is positioned today. For those of you guys who are not familiar with retail positioning, what we are looking at here is we're just taking a look at a net by net basis. We can take a look at client positioning. We pull in some client data and we can see where traders are trading, right? Where are the average retail traders buying and selling? Now, I want to preface this with not all the time are retail traders wrong, but they're wrong often enough for us to pay attention to it. So we talk about, for example, if we're looking at the Euro USD right now, it seems like retail traders, well, not seems, but they are piling in to a long position on average. So they're very heavily buying things like the Euro USD. And Tom, you and I discussed the Australian dollar earlier in detail. Well, retail traders are taking the other side of the trade that we're thinking about, right? That short side. Retail traders are betting very heavily on the long side of the Australian dollar. Meanwhile, Tom made a great point talking about how on a longer term basis, it's in a downward trend. Sure, it's hitting near lower term support levels, so perhaps there's some room for a bounce. But the point is, it's in a downtrend overall, and retail traders have been very long biased on it for quite some time here. Same thing with the Kiwi against the US dollar. And you flip it around if you want to take a look at some things that retail traders are short on. They're shorting dollar yen. And many of you guys know dollar yen has been really strong. What you'll see here is a consistent theme in terms of retail positions. Generally speaking, they are going against strong moves in the market on a consistent basis. You almost don't even have to look at retail positioning to know generally what retail traders are doing. Once you've done this for a while, you realize basically when something is trending really strong, retail traders are taking the other side of that trade a lot of the time. Not always, but often enough that it's worth noting. So how does that matter to us? Well, if we look at a chart like dollar yen, and we say, well, retail traders are betting against this thing, right? That's, first of all, that's probably been a rough ride. If people have been shorting this whole thing as it just continues to trend higher, that's a tough journey. So, first of all, that's tough. But how do we play this? Well, in my opinion, buys on pullbacks are more natural here. Instead of trying to pray that this thing reverses, going with the flow, going with the trend is a key thing. So we keep tabs on that retail positioning. And if you guys do want to try out this tool for yourself, we mentioned this earlier, but in case you didn't see that message, if you guys want to try out our software for free, here is a link right now. You can send a direct message to our support reps. This is in the YouTube chat. And if you're watching this back at a later time, just head over to a1trading.com and you can click the live chat feature in the bottom right hand of the screen. So yeah, kind of an interesting spot to see where retail positioning is currently. Of course, we could also take a look while we're at it. We could just take a look at indices and commodities like gold and oil. We could see that right now, gold and oil, they're pretty heavily long on both. So I'm actually in the retail crowd. Like I said, they're not always wrong, but they're wrong often enough that it's worth paying attention to and being cautious. It's not the only indicator that we pay attention to, but it's certainly a useful one. Indices, they still seem to be very net short, especially on things like the NASDAQ, where retail traders are at 67% short ratios.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EdgeFinder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.